Hey, good afternoon, and welcome to today's webinar from BISG, the Book Papers Market Update presented by Bill Rojack of Midland Paper. Thank you for joining us today. Our presenter is a huge resource for us, and we really appreciate his time. Bill is currently Sales VP for Midland Paper, where he's worked since 1994 to source and develop paper products and service programs for many markets, but he's concentrated during that time on publishers and book manufacturers. His personal interest in book papers, as well as environmental stewardship, drew him to early adoption of what are probably now fairly popular trends, particularly in the area of sustainability. That interest has provided Bill a unique opportunity to develop aggressive but achievable procurement strategies for his clients, often in collaboration with the paper manufacturers who are global and their supply chain partners. As you'll hear today, I'm sure, he's concerned by the quickening pace of change in the industry, things that are happening in paper, in printing, publishing, and retailing. But he's simultaneously energized by the many opportunities that that kind of change presents. He describes himself as an optimist, but he's also a dedicated father of four and a tireless worker. And he lives not so far from me in Madison, New Jersey. Bill, thank you for making the time to do this today. I'm looking forward to both your presentation and the conversation that will follow. And if you have any questions for the folks in the audience, the Q&A is a good place to put it. You can also add it to the chat. Thanks. And Bill, the floor is yours.
Got it. Thank you, Brian. Thank you, BISG, for giving me the opportunity to present on what I'll consider a pretty important topic today. The book papers market. For many years now, book publishing paper has been considered roughly about 5% of the overall book publishing market. I'm looking to update that number. I haven't heard of a recent one, and I'm pressing some of my sources to give it to me because I do think that there are other markets parallel to ours that are shrinking much faster than ours. And I say ours because I do consider myself squarely in book publishing. I'm in the business of making books. So for all of you publishers out there, thank you. I feel like I'm akin to you. The paper market, as it relates to book publishing, is changing and changing quickly. So what's happening out there? Well, I think probably most of you are seeing that there are price increases coming at us rapidly. And I'll talk to those here in a few minutes, but in the near term, I'll tell you, you should expect more. It's not just a COVID effect. COVID is certainly a time machine that's speeding this up, but this is a broader, larger market dynamic that frankly has been going on since the late 1990s. Long before even the Kindle came around and books were dead. And they are so not dead right now, as you all know. But there are many other touches that are causing the paper market to consolidate, and that's ultimately what's happening here. The post office is really struggling right now. I use my Publishers Weekly subscription. Yes, I still get a printed Publishers Weekly as a sort of a barometer. And last week I got 3 issues in 1 week. There seems to be a real slowdown in the post office that honestly is somewhat unprecedented, and it is causing problems into the paper market because the main catalogers, let's say, who rely on that postal service are really frustrated. Direct mail are frustrated right now. Even their markets, they're choosing still to print a catalog, and now it's not getting to the consumer on time. All of these things are having a dramatic effect on the choice to continue printing, the cost to continue printing, and therefore more consolidation. And as you'll see, paper mill capacity reduction. I've got some other slides past all of this, but we are an industry in major transformation, as all of you know. It's almost harder to keep up with the news of what paper machine or mill is either closing or converting to a packaging grade. And that's my job. And it's a lot to keep up with. And I'll show you some more stats as we move along. But it's startling to see how much this industry has contracted. Same is true on the print side, as I know all of you know. And it's not just in book, it's in catalog, it's in it's in direct mail. But as it relates to us in the book market, I felt it more this maybe last 2 years than I've ever felt it before. And I'm seeing my publishing customers do things they've never done before as a result. Within the last 6 to 8 months, I've seen books going to Europe for manufacture, which I am. So I'm losing paper orders here that are going over there. And there's a whole different set of logistic dynamics behind that. But I guess the short story is that there's nowhere to hide from this industry transformation, if you will. So what is the market condition about, if we're going to sum it up in 2 or 3 paragraphs, what is it? Well, shutdowns, conversions are ruling the day. And as a result, that means that the machines that are left have high operating rates. That was not the case in Q2 of last year with COVID, obviously. But as the market has rebounded, what we're finding is that the capacity that was taken out is more than the demand that is during normal times, if you will, whatever that normal is now. But as we're spiking back a little bit in demand, we're finding there's not enough capacity in many of the markets to serve it. So when you have that dynamic, you typically have price increases. What's different about this one is that in most cases, the mills are not justifying their price increases based on the supply demand ratio. Instead, they're justifying it on their own raw material cost increases, which typically have never stuck before. And now we're seeing a different dynamic. So what are those raw material increases? Well, pulp is one of them. Transportation challenges, which we're all feeling. You'll see there are some other raw materials that go into this. Energy is up, fuel, obviously, on top of these higher mill operating rates. It's causing a little bit of I'm not going to say a panic, but it is a set-in of discomfort that we haven't seen in a long time. So I'd like to bring it back to the 40,000 feet, if you will, to what I consider the 5 main influencers as it relates to book paper. And let's start with COVID, because that obviously has been what we've been focused on for fully 1 year now. I didn't see books becoming as cool and making their resurgence as has happened here in the past year. I'm thrilled about it. For all of these years, I've been sort of touting the fact that the book market has been growing. Number of units might not be growing, but the number of titles year over year continues to grow and has since long before I was born, and it's still going. And that is something I've been pressing the paper mills to say, is that the book market is never going to contract, especially not with some of the new technology that's come on. Now, the number of units that are produced out of that might have, but they're going to be, theoretically, if we do this right, our business is going to be more efficient. So I look at that now, and you put that up against COVID, and what do we see? Of course, we see screen fatigue. We see people wanting to read for leisure. And then, of course, we have the at-home learning dynamic, workbooks. There's the education space. I contend the education space is the one that's probably got the most transformation in front of it as it relates to paper, because the days of the real big long textbooks are maybe not behind us, but they're certainly changing, and print on demand is surging. Go to the where we're working and how we're working. That dynamic now is different more than ever. And for those of you who aren't in the paper business, that's had a huge effect on the standard, 8.5 by 11 cut size manufacturer. So Domtar, IP, all the big names out there who make that 8.5 by 11 copy paper was most prevalent in offices. Well, those offices are all closed. And so it's had a seismic effect on those machines and what they're doing. In some cases, those paper mills were off 50% last year. And we've shifted toward home. Sure, we're using 8.5, 11 cut size, but nowhere near the way we did and how we did. And that transformation and change goes to the manufacturing sector too, right? Anybody who operates a manufacturing plant has to stay open. But in some cases, we have to social distance or we have to reduce staff. We have to monitor the COVID protocols. And then we bring stimulus money into that for who's going to be working and who's going to raise their hand to say, I'm actually going to make more if I take unemployment. And we at Midland have our own trucks and drivers and warehouses, and we definitely felt that and are still feeling it in some cases. So this labor shift, if you will, is having a direct impact on the paper mills themselves, because in some cases they can't get the people to come work. We talked a little bit about the United States Postal Service, but how we buy things, how we have them shipped, even how we advertise is having a major impact now on the paper business. Advertising pages in magazines are off so far year over year over year over year that it's almost hard to keep track of. That's a fundamental sea change, and it has a direct impact on how much paper is made to support those magazines, right? The same is true in the retail side. Cataloging is different today than it was a year ago. And that's going to continue. Your circulars that you got in newspapers, that market is different. Coupons, that market is different. And that's all paper. And it all has a direct impact on these giant paper machines. And in many cases, aren't just making stuff for direct mail or for catalogs, they're also making it for books. So we get caught in the collateral damage, if you will. And then, obviously bankruptcies and bad debts, they affect us all. But as paper manufacturers, paper manufacturing is the third most energy intensive business in the world, okay, behind steel and behind oil refinery. So it means that it's very expensive to make paper. That's the bottom line. To greenfield a paper mill takes 5 years and $2 billion. That's not happening anymore. We're not seeing any of that around here. In fact, that's why we're working so hard. We, the paper manufacturing side of this market, is working so hard to repurpose these paper machines because they were so expensive from the start. Well, when you have markets in bankruptcy and experiencing bad debt, the whole supply chain leading all the way down to the paper manufacturer gets stung. And when the paper manufacturers get stung, it's not good for any of us. So it's a really big dynamic that I guess if you stand all the way back and you look just as COVID by itself, you can see the drivers to why the paper market is changing the way it is. Now let's talk about geopolitics. I'm not going to talk about politics, but we'll talk about geopolitics, right? The trade disputes that have happened since 2018, which was really the last tight paper market, that was in part and largely brought on by trade dispute and tariffs, at least on the uncoated groundwood side. Some of that's still going on. There's no question about it. But now we're feeling it in the way of, I can't get my containers out of China with printed matter in it because the content's being reviewed. I've got the same problem with recycled fiber right now. China doesn't want our recycled fiber because we were sending them more garbage in our recycled fiber than we were good recycled fiber. So they put up what we call the green fence, and they said, we don't want your junk anymore. India did the same, and now there's this very different global trade dynamic that's happening in the pulp side that has had a major impact on paper and paper manufacturers. All of us here are in the freight market, whether or not we like it. But somebody said to me the other day, you could walk across the Pacific Ocean on the containers that are in a queue to get either loaded or unloaded in California all the way over to China right now. That it's that bad. Some of it's COVID. Some of it is just lack of capacity to load and unload. This doesn't look like it's letting up anytime soon. Just as a point of reference, somebody told me, one of the paper mills told me the other day that they could ship paper via ocean freight from Canada into New York for, make up a number, $100 a ton. That same container could go from Canada to India for $60 a ton. You could then take that container from India and send it back to the United States, and it's $300 a ton if you can get the container. It's really unpredictable, and it's causing a lot of heartburn in the global trade space. And it's not just with finished products, it's with the raw materials too. And then let's talk a little bit about sustainability, because that's a big piece of this, right? The paper business has been working hard for a very long time to tell the other side of its sustainability story. That is, they don't just cut down trees, they manage the forests. They need the trees. The trees are crop for them. If they don't have trees, they don't have paper, so they have to take care of the forest. Well, the paper companies have gotten pretty good about being stewards and messengers about their environmental story today. There's no question that in the past they were environmental offenders. They've gone steps further with some of you, and in fact, many of all of us, who are now looking at how are we going to be environmental stewards, which is something I've been doing my entire career. And it's having a major impact on the paper manufacturers, because now they're not just looking at, call it fiber certification and managing the forest. Now they're looking at carbon emissions. Who has the lowest emissions and how do they mitigate them? And what's the best process to do that? So and I mentioned the SDGs, the United Nations Sustainable Development Goals. If those of you on the call don't know what that is, I encourage you to look that up, because that's going to be I think the main pillar for the future of sustainability around really all corporate life, but especially inside of the publishing business, including paper manufacturing. Technology advancements, I'm spending more time on high-speed inkjet and print on demand in book publishing than I ever have before, and I expect that's only going to continue. Some time ago when I got involved, it was really just to manage reprints, and now it's the front of the tail and the end of the tail, and it's a fascinating dynamic as it relates to paper. The chemistry for a lot of these machines, especially for color work, is such these aren't printing presses, they're computers, and you don't want them to go down. And the paper not all papers perform the same, and so there's a lot of chemistry involved in figuring out what the right sheets are, and it's exciting. It's an emerging market, and that's having a direct impact on the paper manufacturers and where they're spending their time, because they're looking for the markets that are going to be here in the future. Go to cost increases. Well, we talked a little bit about transportation. Here, just with drivers and containers and fuel, we all know the story. It's a very cyclical and frankly even week to week type issue, but it sort of peaked here in the last several weeks with what happened down in Texas. It's very weather driven, and so that polar vortex that dropped down there caused havoc in the freight markets, specifically in drivers and trucks. It's still not good. It is getting a little bit better. This week's better than last week, and we expect it's going to continue to get better. But there's no question everybody's paying more for the fuel to drive that truck. And we have a driver shortage. It's a real problem. We're short 100,000 drivers right now, and the average age of the drivers that are out there for long haul drivers is 55. And they're going to retire, and nobody else is coming into it. And in the meantime, demand is surging, and it's going to continue to surge. So we have a problem there, which means freight's only going to continue to go up over the course of time, and that's a problem for these paper mills. Pulp is spiking right now. That also is very cyclical. It will come back down, but in particular for those non-integrated paper mills, that means mills that don't make their own pulp on site, or those mills that are what we call pulp short. That is, they have to buy pulp in the open market. They don't make enough on site. And this is going to sting in a big way. The pulp prices are up 20% in the last several months, and it's continuing to spike. So it's a problem. That's coming off of a very low from last year during COVID. And then we even fight paint, believe it or not, in the paper business. TiO2, titanium dioxide, is a major additive into the paper market for brightness and opacity in all different sheets, but particularly in book paper. We need it. Well, that stuff's expensive from the start. We're in the spring, and the spring is what we call coating season. That is, everybody breaks out their paintbrush and goes to start painting. And that means titanium dioxide comes in even higher demand, and therefore we see that even surge, and other chemicals like it. So we're fighting, I'm not going to say a perfect storm, but we're fighting a lot of fights right now. And what's happening then, of course, is the mills are you take all of this together, we're seeing mill closures and conversions. They're chasing packaging. They see an emerging market in the white linerboard and brown containerboard market. And so they're repurposing these paper machines that way. And then we're also seeing it obviously in the print consolidation and in offshoring. So there's an awful lot happening to our sector, and all of it leads to pressure, all right? So when I say pressure, I mean supply demand pressure, but look at some of these numbers, folks. So we're supposed to have a rebound, and we are feeling it, there's no question, but it's a rebound over what, right? 2020 was an off year as far as those numbers go. But 2019 wasn't great. It was down. 2018, you keep looking at what we're going up off of, there's not that much of a bounce. However, the supply now, as I referenced earlier, so much supply has come out, especially in the last 18 months, that we're going to have this, demand's going to continue to drop over time. But right now, there's not enough supply. So we're going to have, until that demand drops to this level, we're going to have pressure, and a fair amount of it. On the coated side alone, North American CFS is coated free sheet, and CGW is coated groundwood. The amount of capacity that has been taken out since the late 90s is truly just staggering. And it's sad because these are jobs, and they're skilled jobs. But it's a big part of why we're feeling what we're feeling. There are not a lot of coated manufacturers left in North America. So that's going to bring in a whole different dynamic. Where are we going to get the paper? We're going to get it from around the world. It's a global paper market. Now enter back into the geopolitical discussion and trade. It's really fascinating. So what do we have? We have a near-term imbalance, not enough capacity. We are expecting a bit of a rebound, and those high operating rates are upon us now. How long will that be? Most of the predictions I'm seeing are that this is going to be the next year or so. It is different from 2018. So, and it will come back down, but I don't know how much lower it will go. But right now, it's sort of a buckle up. And I would say, then that brings us to the next discussion of what's your action plan? Well, I don't think any of us like to hear this, but this is what I'll consider my reality. This is how I'm counseling my clients right now. And that is that we got to look at the long game. One, you need to decide who you think is a paper mill and supply chain partner is going to be there when the smoke clears. Who's going to be left? And then, rather than fighting over what the prices are, I really do believe the conversation needs to shift to what price does my manufacturer need to get in order for their business, my business, to be attractive and sustainable, period. That's it. And then how do we get there? That's the business partnership discussion that we need to be having right now. If we're going to be the days of leveraging one price off of another, that's certainly not the time to be doing it right now. So prioritizing source of supply, preparing for that escalation, and then those of us who are strong with relationships and financial footing certainly leverage that, because you are going to be one of those who's here in the end. And frankly, the book market has a very good story to tell that way. So the mills are interested in partnering with us right now because of that great story, because our model looks like it's going to be sustainable. All right. So I'm a talker. That was 24 minutes, and I've got a lot of extra material. That is my 6 slides for this deck. The deck is probably 35 slides long with supporting material. So you're welcome to hit me with questions. Brian, I don't know if some have come through, but I'm an open book. Sorry
Thank you. No, thank you, Bill, for giving us that overview. And I do have a few questions already, and I would encourage people to add theirs either to the Q&A that's shown generally on the bottom line or the bottom bar of the Zoom panel, or the chat, and I'll be monitoring both as we pose questions for Bill. If I could maybe just take you to the next slide in this, because we had a chance to review it beforehand. On slide 7, there's a lot going on in this slide, and I just want to give you a chance to talk about something that is probably second nature to you, but may not be as visible to people on this webinar. There's been a real shift, and you see it in the bottom left-hand corner of this, to production of packaging and linerboard. And so that's been accompanied by a lot of closures and or bankruptcies, but maybe you could talk about how the shift in demand mix is also affecting overall availability of book papers.
Sure thing. So, I mean, maybe most visible to us and most recent is that Domtar just announced that they are taking major capacity of theirs that has been making white paper, and they're converting it to packaging materials. They're doing that primarily because they were, as I mentioned, one of the big cut size or copy paper manufacturers out there. So let's pretend that what they're chasing, they're following the trend toward an emerging packaging market, which there's no question, packaging is booming right now. But as they do this, and it comes at great cost to them, it's hundreds of millions of dollars to make these conversions. It's leaving behind this hole on the paper side. And while the machines that they're converting don't necessarily make book paper, they are then having to juggle and shift what's left in their mill system to accommodate some of those grades that they still need to make. So Domtar is a good example because they've got, they do make book paper, trade book, free sheet trade book. They also make commodity offset, and I'll speak to that market because I firmly believe that this machine conversion to packaging piece has happened to strategic equipment such that the market that's left, I believe, most exposed will be the commodity offset market. It's happening to newsprint and it's happening to cut size, where those machines are either converting or closing. And in the news side, some of those mills have gone to value-added grades. So call it improved news, 70, 75, 80 brightness type sheets of paper, some cases up to 90 brightness sheets of paper. That is a value add for them over the newsprint 60 bright that they were making, so it was attractive to them. Well, that market now is getting tighter and tighter and tighter as the circular business goes away. The retail insert business goes away. So that market's getting smaller. And at the same time, the commodity offset, or the machines that made cut size and commodity offset, are also being repurposed to packaging. It's going to leave a void. I think commodity offset's going to be in tight supply here, maybe more than some of the others. The folks who are on that high bright uncoated groundwood are going to have problems getting it. So they'll be looking for offset, and those people who were on offset are going to be looking for more, and there's less of it to go around these days. So it's there's quite a dynamic out there on this.
The question from Shana, and this may actually be something that I think your slides in the 30s, maybe slide 31, would address if you want to take a look at it. It's she says, we've heard about an influx of paper coming from European markets. They're looking to expand potentially in North America. And what's the impact you think of this imported demand, or imported supply rather, will have on the North American market?
That's a great question. So yes, there will be a surge of imports. There is already an uptick in imports. Does the next slide speak to it too?
Yeah, it does.
Appreciate. Yep. So we are seeing it uptick. However, I will tell you that North America is not alone in closing and repurposing its capacity. It's happening all around the world. And And it shouldn't be a surprise to you, but you add the US dollar and currency, and I'll tell you that there's a limit to how much you're going to see come over here from Europe. There's certainly an increased appetite right now and opportunity, and it depends upon what market you're talking about. But in particular, the uncoated free sheet side of the market, so your copy paper, the newest machines made in the world are not in North America. They're overseas. And those new machines are huge and very fast and very efficient. So I can make the argument that those are going to be the ones that will be here when the smoke clears, and that we will continue to close capacity here that can't compete effectively with that. Where will that paper have to go? Some of it will have to come here. There's no question about that. And it is coming here in some regard. But as you can see, going all the way back to 2012, there's a flow to this chart, and it does ebb and flow. It comes and goes. Some of it is global trade. Some of it is currency. But I do expect over the next year, you're going to see imports pop a little bit. But again, it's on a much smaller scale than it has been.
This may be an insider question, but some of those newer, more efficient machines are in places where pulp is not easily in supply. Is that potentially also suggest that we're going to start to see flows, not just of imported paper, but exports of pulp from different markets?
So the pulp market's a fascinating one. It's very speculative. Pulp does flow all around the world in a huge way already right now. What I'm not as much focused on the Pacific Rim in paper. There's an awful lot of paper manufacturing capacity that's come on over there that we do need to take a look at. But what I don't think is a mystery to many here is that one thing China doesn't have is a lot of trees. So they do need pulp to come in from around the world. Now, Indonesia has an awful lot of trees, but Indonesia is a four-letter word in the supply of trees because so much environmental offense has gone on there in pillaging the land and the indigenous people that live there and the biodiversity and the habitats. It's a terrible story. So yes, Brian, to your point, I think there's going to be an awful lot of trade flow there. There are some very large assets in, say, in Portugal making stuff like this. So you don't have to go as far as the Pacific Rim to find that. And there's fiber that was not indigenous to that area that was brought there. That's eucalyptus feeding those machines. That's very efficient, and it makes a great sheet of paper. So I believe we're going to see more of that. I don't know how fast, but I do think COVID sped everything up. Last year, I would have said it would have been in the next 5 years. Maybe it's within the next 2 that we see a dramatic influx of those grades here.
Great, thank you.
Yep.
This is kind of in a different gear, but you spent a little bit of time in your introductory slides talking about driver shortages and operator shortages. And so Perry's asking, do you think automation might become a viable solution to those kinds of things? So essentially driverless trucks or enhanced robotics in a mill.
That's a great question. And it's a double-edged sword. I think the answer is yes. My gut as a 48-year-old guy who has 20 years left in this business is I hope so. I hate to see jobs go away, but right now they can't attract drivers. And one of the dynamics, I've spent a lot of time in this, one of the dynamics is that today's younger generation believes that driverless trucks are going to be the future. And so why would they get into an industry that's going to disappear? That's not going to have the demand for them. So I think long-term, the answer is yes. The near term is the bigger concern, at least in my mind. And I don't know what the answer is. 95% of the world's containers are made in China, and they can't get them out of there fast enough. And so we not only have a driver shortage, we have a container shortage. So this is an issue. It's a big one, and it doesn't just affect raw material. It doesn't just affect rolls or sheets of paper shipping somewhere. It affects our books. going all around the world as finished products. So it's something that's going to touch us all.
Yeah, it does feel like there's an ecosystem change that has to occur. You do have in some of the slides that you prepared just the information about the relative decline, I think, of driver wages over time, and
Yep,
I think that's it right there.
yep,
And you show really clearly from I think it's from 2002, 2003 to today that the real wages for truck drivers are now declined significantly.
that's right, significantly. And you look at the forecast driver shortage. I mean, where we are right now, it's around 100,000 drivers short. That's only going up precipitously over the next 5 years. So it's a big deal now. Median pay at roughly $60,000. Uh, that's a tough lifestyle to be gone all the time from your family, driving, especially for the long hauls, uh, and just making that sort of money. It's tough. So I think, it's kind of like a school teacher. My wife's a school teacher, and it's she's battling right now for not for not a lot. So I compare those two, and I don't know what the sea change is going to be. I do think, though, long term, that driverless trucks and technology will certainly be an answer. We're seeing huge change on the in the high-speed inkjet side of the business in technology transformation. So I can only hope that that's going to affect some of our supply chain also.
I might be jumping around a little bit, but on slide 13, you talked about the pulp prices that are on the rise as a component of the overall increase in paper prices, but you also talked about the importance of operating an integrated mill. Maybe you could spend a little bit of time just talking about what happens to if you're doing business with a mill that doesn't have its own pulp supply, for example.
Sure.
What are the risks that you face, and what kinds of things might you be thinking about for your strategic planning?
Right. So that's a really interesting one. Uh, for going back to my environmental pedigree, if you will, or interest, for years I've looked at the recycled paper market, saying to myself, I just wish that more recycled fiber. There's so much recycled fiber out there. We North America do a great job of recycling paper. And wouldn't it be great if we, the book market, were able to take all of our returns and somehow segregate that fiber a certain way and then put it back into the manufacture of books and call it close the loop a little bit, if you will? Well, it actually costs these paper mills tremendous amounts of money. Those that are integrated, you can imagine, these are very, very, like I said, they're billions of dollars to operate and manufacture. So to input a foreign fiber source into that, once you have such a finely oiled integrated paper mill, costs money, and it kills their efficiencies. Now, the demand has also not been there the way we wish it had, but it speaks to some of what I think this is pointing at, and that is when pulp spikes, those mills that are not integrated, that don't make their own paper, they're going to struggle. So part of what I think you need to do is have a candid conversation with your supply chain and however it is you procure paper to find out what mills you're using, who's integrated, and what their call it raw materials supply strategies are. Because this is something that can take out paper mills over the short amount of time. We're looking at alternative fibers too, whether it's, I'm reading about beet, you read about sugarcane, you read about hay, you read about hemp, you read about all these other ones. It's there, the technology is there, but the paper machines being used to support this are very small. It's a niche market. To introduce that into one of these really big manufacturers that's integrated, it's unfortunately unrealistic. These mills are so large, the integrated ones, that they typically produce so much energy at the pulp mill that they sell energy back to the grid. So they're actually net energy producers because of that process. So I say, it's a very complicated web, but it is something that as you look at your strategic supply plan, you absolutely have to understand where that raw material is coming from.
So part of the takeaway there is just be aware of what kinds of mills you're sourcing from so that you can both be smart about your long-term plan and aware of potential disruptions.
That's right. So security of supply right now is really that's the mantra for the day.
Shana asked another question that I think is very much up your alley is that do you expect to see new requirements, maybe from the government agencies, that will require greater transparency into supply chain sustainability? And what role can different constituents expect paper manufacturers to play if those rules do come down?
That's a great question. Do I expect it? I do. I don't know how, to be honest with you. I've seen the environmental discussion shift, as I mentioned, a little bit from forest certification, so SFI and FSC and PEFC and some others, to the carbon discussion. And I do think the carbon discussion is going to be the one that ends up with the most focus going forward. When I say carbon, I mean greenhouse gas emissions. So I'm spending a tremendous amount of my time right now trying to come up with, what do I call them? Solutions maybe for how better to track and understand the footprint of my paper that goes into a particular book or into a whole customer. And that is, I think, the future. I think that's what we're going to see. Will we see the government mandate more? Probably. I read today that the pulp and paper industry is responsible for 0.5% of CO2 emissions around the world. I haven't vetted that, but while that might seem insignificant, there's an awful lot of carbon being emitted into the world, and I would think that it's going to get, as an industry by itself, that's enough that it would probably get more attention. So again, I look at those SDGs, the UN SDGs, but I also ask all of you to focus on corporate social responsibility programs, right? I spend a lot of time in that space too. And those being the 4 pillars of, philanthropy, and then call it environment and conservation, diversity and labor, and then also volunteerism. And that's where I'm focused on that with Midland. I'm focused on that with my suppliers. And I spend a fair amount of time in that space with the publishers also, because I think not only is it the right thing to do, but it's probably the wave of the future.
Yeah, I think I don't want to sidetrack you because I have a few more questions as well with respect to paper. But as you know, the BISG is joined with BookNet Canada and BIC, Book Industry Communications in the UK, to create a Green Book Alliance. And one of the things that we saw in a survey that we'll be publishing shortly is a real call for better understanding of the carbon footprint, not just of paper manufacturers, but of the book industry supply chain. So paper would be a piece of that, but so too would trucking and a lot of other decisions that we make to get books from publisher to consumer.
And while we're on the topic, I might as well just mention these for those who are interested in this space. There are several ways to calculate that in the market as it is today. They are the one's free. The Environmental Paper Network, EPN, has their paper calculator. All of these, believe me, every one of the things I'm going to tell you right now has a critic. So none of them is perfect. But EPN definitely has theirs. There's one out there called EPAT that's been around for a long time, and the license was just repurchased by another entity, and I think it's going to be revitalized. That's the Environmental Paper Assessment Tool. There's one not unlike that some of you may already be a member of. It was formerly known as PREPS. The parent company is Cornerstone, but it's now known as the Book Chain Project. there are a variety of ways to measure environmental impact of paper, and some mills that specialize in recycled paper and have a really good environmental story to tell, have their own calculators and have their own life cycle analysis where you can figure out what their carbon footprint is for a particular grade or a particular location. And that I think will be the future.
Yeah, we haven't gone public with the agenda just yet because we're with the pandemic. Honestly, we're just a little bit behind. But our annual meeting on April 23rd will be dealing with issues of sustainability, not just environmental sustainability, but also business model. And we'll be giving an update on that.
Yep.
Can you talk a little bit, some of the slides that, I mean, I think slide 22 might be an example of a decline in mill inventory, that we're at relative lows for inventory of paper on hand at mills. What does that mean? I mean, if you're buying or planning to print, what does that low number on the right side, at the end of 2021 and beginning of 21 mean?
Well, really what it means is the least amount of flexibility at the paper manufacturing site than that they have, right? In many cases, let's pretend you have a bestseller that hits, or a drop-in that comes right now, and you need paper turned on a dime. Well, if mills have adequate inventory in their warehouses, then they don't need to make the paper that's currently earmarked in that particular run for more inventory replenishment. They have a buffer there, so they can slide you in for your paper need to meet your hot title. Right now, the mill inventories are so low that's obviously a runoff since the fourth quarter of 2020, when they built inventory all last year in order to keep their machines running. And they didn't want to go into 21 with big inventory numbers, so they sold off, and they sold off dramatically, to the point now that there's no flexibility for them to break into a run to meet our quick turn needs. They have to replenish inventory. And that is a major problem for the book market, which, as we all know, operates just in time in many cases. So we're going to feel some pain here in the near term, and it's not even our busy season, right? I'm not so sure that we have a busy season anymore. It feels like it's always a busy season, but it's not July through November. And boy, I hope these inventories pop back up between now and then a little bit. But demand is up enough that I think these inventories are going to stay low for a while.
And I think the slide that follows this 23 shows the operating rates. And is when mills in general are operating at above 100% of capacity, is that the drawdown? Does that reflect the drawdown of inventory on hand?
It does, and so what you see typically is that a mill operating rate of 92% or higher is a tight market and one of increased prices, typically. You can see what happened in Q2 of 20. And so they ran those paper machines and built inventory. But we also, Brian, that this is showing the impact of closing paper machines, right? So as we reduce capacity out there, what's left on some of the overhang, I'm focused really into Q3 of 21. So this is just, I've got these slides for each of the sectors. This is what coated, that was coated free. Yeah. So now we've got coated groundwood. Now we've got uncoated free sheet. Now we've got uncoated groundwood, and here's newsprint. All of them are tight going forward, all of them. So that's why I say, I caution everybody here, do as much in the way of forecasting as you can, and really communicating in partnership with your supply chain.
You had a slide just toward the end, I think slide 38, where you have a set of issues on things to think about next.
Yep.
Um, and I mean, are there any of these questions that just jump out at you as really serious tools for people planning, trying to figure out what the next couple of or 3 years look like?
Yeah. Well, I mean, I'm focused on the print and bind market for books here in the States and North America, really. And I should broaden that globally. But of course, my paper is going to be going into North America. And so my hope is that we've seen enough consolidation that, and we've seen enough in the way of technological advancement that we find more efficient print and bind capacity coming on. And I just don't know that it's going to happen fast enough. And I'm concerned by it. That POD model is really powerful, but and it will help us spread out some of the peaks along the way, for printheads, but it can only do so much compared to the real pops out there. And if we get any runaway titles, which we haven't seen huge runaways in a long time. Um, what's it going to feel like? And it depends upon what sector of the print market it's in. I mean, I've had in the last 3 months, I had a container container coming from Asia fall into the ocean, and all of the cookbooks that were on it are down there in the bottom of the ocean somewhere. So I got a rush reprint of, paper order coming in here, and there was nowhere to print it. I mean, it's scary. So I'm worried about it. That more than anything, I would say. But there's plenty of things. Like I said, I'm an eternal optimist. Where there's change, there's opportunity for all of us. And our business is strong and it's growing. So the good news for us in the book space is that we are not in the retail circular market, and we have emerging products. We're growing, and so we're going to command attention, and hopefully our print and bind and our paper supply side balances out enough that we're all happy for the next 20 years, and I can retire with a big smile on my face.
Yeah, we can also work on not stacking books at the top of the cargo
Thank you for
container
that.
load.
You're right.
Yeah, it's just put the books at the bottom. It'll take longer to offload, but they won't fall off the ship as often.
That's right.
So there's actually one of the things that's nice about this job, and I guess it's probably true of yours as well, is that you learn stuff. The number of times that things fall off container ships is not trivial, and that can essentially containers that fell off different ships floating around the ocean are a source of potential risk for those ships, or for I guess the ones that follow. So.
So I encourage any of you who have not done it already. There was a great video put out by the Wall Street Journal several weeks ago that I posted up on my LinkedIn page. If you've not already seen it, it's about the history of container shipping. And I learned so much from it, and it's fascinating. Just take the little bit of time to click on it, because it's really interesting stuff.
Yeah, and the thing that you focused on here about what happens with book printing and binding capacity is very much on our minds as well. We're trying to think through what are the supply chain implications, how does forecasting work, and the like. And it's a tough question to solve for the industry, but I think it's the right one to ask, which is, what does the demand profile look like going forward, and then are we organized in a way that's going to allow us to meet it, not just as publishers, but also as manufacturers, as paper suppliers, and other parts of the supply chain, including distribution.
We're looking at for a sustainable future. That's just the way I'm looking at this.
One of the questions that came in while we were talking was from Ryan, who's asking about if we could get a PDF of your slides. And what I'd like to suggest, Ryan, is that some of the material that Bill's been kind enough to share is specific to his company. So he and I will have a conversation after this, and we'll see what we can do. We are going to send out a link to this conversation, this recording, to you, if not later this week, then early next week. And when we do, if we're able to share something, we'll include it with that email. So I want to be conscious of your IP as well.
Thank you.
Any last thoughts before we close up? I mean, it's been a vibrant market. It's an evolving market. Is this unprecedented in your time doing this? Is this or is
The
an
only thing,
evolution?
that's a good question. The only thing I'd call unprecedented about it is the pace of change. The change has been here all along, you know, and it's not just about profit anymore. So I go back to corporate social responsibility. As this market changes, sure, it has to be focused on profit, but it's got to be focused on doing the right thing also. And that's why I love books. And I'm not going anywhere because I believe that books are, I mean, they are theoretically one of the greatest inventions of all time, right? And so there's nothing quite like snuggling up with my kids and reading a book with them. And in as much as all of you are involved in that process, as a father and as a human, I thank you, and I'm thrilled to be part of it. And content delivery. People ask me if I'm threatened by the ebook, and the answer is no, not at all. However, people are reading. If it gets them reading, I'm happy, and I know that paper has a place in that. So I feel confident in all of that, and I am a wide open resource to any of you at any point. So please go ahead and use me, because if you couldn't tell, I love what I do.
Oh, thank you, Bill. Thank you for making the time and also preparing the material that you did for today's discussion. We really appreciate it. We also really appreciate your perspective on not just the mechanics of the paper market, but also some of the things that are probably going to affect us in 2021 and beyond. You're a great resource, and you've been a steady voice on issues related to sustainability now for a couple of decades. And we really appreciate that commitment as well.
My pleasure. Good.
Okay, thanks to everyone for joining us today. We really appreciate it. A recording of this will be sent to everybody later this week or early next week. And thanks for being part of this today.
Bye. Thanks.
Bye.